All right, and we are live. Hello and welcome everyone to another edition of Trading Bitcoin with your host, Tone Vays. Coming to you live this morning right as the market is about to open, so we can take a look at early morning action. I'll finally be with you guys once again for that potential 10 a.m. reversal, which only seems to happen on days where I'm not streaming at 10 a.m., which is most of the days, while the days that I am streaming at 10 a.m., it doesn't actually reverse the market. Let's go straight to the charts and take a look. I wanted to bring this video early today because I got the rest of my day cut out for me preparing for the workshop this Saturday. Very happy people are signing up for that. You know what? Let me go there. I'm also continuing to update this. I even updated some yesterday. Here is trying to make this as clean as possible. I may even add a few more oscillators and indicators here. And check this out. I gotta update some of the pictures even. Please check out the Learn Trading section. Once the workshop on risk and position management is over, I will probably add a section of that as well. This is your free way to learn if you are interested in trading. It's not for everyone, but this is a completely free resource. Still have to fill out a bunch of these, a bunch of overlays. Still lots of work to do here, but this is your free resource. Those that are looking for more hands-on work, hands-on education, please check out the Risk, Leverage, Money, and Position Management webinar this Saturday. Okay. I'm still, I haven't had time to continue reading the report on Chainlink being a scam. I made it to page 10. I got through 10 of the 60 pages. Probably, I don't know if I'll have time until after the workshop is over, but I'll get to it. I continue to say that this is a well-researched report, has a shit ton of references, and I'm really enjoying it. Even if these guys don't join me for a crypto scam episode, I may still do it because Link is just too funny not to expose. All right. Next, let's talk about the markets. So here is something interesting. So here's the futures market in the S&P 500. And as you can see, our MRI is indicating that we are on a potential trend change off of a double top. Now, if we go back and look at the last time we had one of these red arrows with a 2 on top of it, here's what you had. And that did not, I mean, it's fine. We are, it's been a little over a month and we are sitting at a higher price. But it certainly wasn't good the day of this red arrow with a 2, and certainly wasn't good the day after. And I was in a short position off of this red 2, but right here, I never took my profit. And I didn't think that this would rally up. And right here, I thought that we would go further down, and that didn't happen either. So while I had the perfect trade entry, it wasn't the best of trade exits. This tells me that we have a trend change to the upside. This told me that we were topping on the daily chart. But the following candle, while is showing you the potential of dropping hard, it did not. And then we had another trend change to the upside, and now here we are. Now, earlier today, this candle was a little bit higher, and there was a C right under it, showing you that it was a trend extension end as well. Now, this C, this candle needs to close at a new higher daily close in order to get that C back and for it to stay. Okay, but here's the conflict that we have with the stock market. While this gave you a beautiful selling opportunity right here at the top on June 10th with a 2, just like it's happening today. Remember, this is the daily chart of the futures market. But here's the daily chart of the cash market. And I'll even clean it up for you. And you see nothing like that, okay? So this actually missed. So if this is 1, 2, 3, 4, 5, 6, 7, there should be a yellow arrow here. But the yellow arrow doesn't stay. I need new code. I don't have my new code yet. So you can see how the red arrow missed it by 1 day on the cash market. And right here, our counts are not lining up. We're still a few days short, okay? In order to know how many days, you might have to count 1, 2, 3, 4, 5, 6, 7. 2 more days, 2 more days. Oh, but today is in. So you're only off by 1 day. So in about 2 minutes, this should have a yellow arrow. Boom, there it is, okay? The yellow arrow is telling you that the next day has a potential of having one of these red arrows. And if we get the red arrow, the yellow arrow goes away. That's kind of how this indicator is being designed. Is the yellow is just a warning that an arrow could be coming next candle. But here we are on a potential S&P top. Now, is this a top that I'm anticipating is going to go and break these lows? To be honest, I'm not. This is the kind of top that I'm only expecting to fall to one of these moving averages, and probably not the last one, because if we fall to the last one, we hit another level of support and we hit a triple bottom, which then is likely to break to the downside. So this is the kind of situation that I am anticipating to only take us down to like 31.20 or something. So down like 100 points. But it looks like it's not even going to fall that much. So this is a concern. And if I was long in the market, I would be looking to take that profit today or tomorrow, not to be holding through the weekend. Would I dare go short again? Probably not. What does the 2 mean? The 2 means you have 2 back-to-back tops. That means there wasn't a single break. Like here, it takes 9 candles to create a top. And if you have 2 of them back-to-back, you get a 2. Now, if I do, what was I looking at? I was looking at some asset. I forgot what it was. And there was a, wasn't this one. Was it this? No, it wasn't that. What was I looking at? Damn. Let me go to the weekly scale. No, it wasn't that either. Shit. It wasn't gold. Was it silver? Silver on, we will get to silver in a minute. Damn, I was looking at some asset earlier today and there was a 3 there, but I forgot what asset it was. That sucks. That really sucks. Maybe it was Bitcoin. Oh, it was Bitcoin. Here it is. Boom, there it is. So here's Bitcoin on Heikin-Ashi candles, I think. Yep. A Bitcoin on Heikin-Ashi candles with the MRI, and you see 1, 2, and 3. And what the 3 means, this was 3 back-to-back tops. So every time you get one of these numbers, the probability of a big fall is actually higher. You have a higher chance of going way lower after a 2. And if you don't, you have a higher chance of going way lower after a 3, which is what happened eventually after a 3. Now, you have to recognize when the trend changes. That's why I have these green stars. So the green stars help me identify when this red arrow is no longer relevant. When did it not do what I was expecting it to do? So that's how you read it. Now, one of the coolest ones that I've seen is actually the CME stock. Okay, before I get to the CME stock, let's get to gold, silver, and Bitcoin first. And then please remind me to look at CME. Right. You see, before, people are asking me, see, this is why I'm making this indicator so much more useful. Before, what you would see is this. Before, you would see this. you would just see another 9, and you would see a different color arrow, so you wouldn't know what that means. Why is this one red and why is this one orange? And these numbers are honestly starting to clutter my charts. But when you look at the new one, it's so much cleaner in that the color of the arrow is the same. A cell is a cell. And the 2 tells you that it's it's 2 in a row, which is more powerful than just 1. Okay, so here is the big dilemma in the S&P. The futures are topping 1 day earlier, so it is a bit of a warning sign. I do not yet see this as a major reversal in trend. Not yet. COMEX silver exposed 99.9% of trades are fake. I can talk about that all day. I don't care. I don't care. Guys, I've heard about fake silver trades for as long as I've been alive. It doesn't matter. It doesn't matter. You can participate in trading silver. You can trade the futures of silver. Anybody can do it. I've argued with Max Kaiser on naked short selling of silver. Look, silver is still down 60% from its all-time high. Okay. So what do I think of this? Well, this is certainly a reversal candle in the futures market. Let's see what it looks like in the S&P market, because in the cash market, there is no reversal candle. So I'm going to wait and see. I'm not going to say any judgment. The cash market has its double sell tomorrow. Let's see if we achieve that double sell on the cash market tomorrow. But if we do, this may no longer be a relevant reversal candle. So things are topping going into end of week, but I'm not ready to proclaim that this is a major top that will crash the market. I thought that this was going to be the major top to crash the market right here. This was my best candidate for crashing the market back to the COVID lows, which did not happen. Then I felt that this was a good candidate to crash the market to COVID lows. That didn't happen. This one, I didn't think would crash the market to new lows, but I thought it would certainly drop the market. That's why I was in a short trade. I was also in a short trade here, and I was in a short trade here. I've taken every single short trade on all of these arrows, here, here, and here. This one worked out well. Well, not really. Well, it worked out better than the other two. I did not take the short trade here, and I am not ready to take the short trade here. Not yet. Not yet. But if I was long, I would be considering exiting. And I can always go back in on Monday. Now, let's talk gold and silver. Well, let's glance at oil. Not doing anything. This is... Again, you see how all this insane cluttering? Let's get the new one up. Okay, so once it loads, I'll drop this one. I've also asked my developer if we could make some kind of an indication that this top is happening on multiple time frames. Right here in the indicator. I don't know if that's possible. It wasn't possible before. It might be possible now with the new one. So now, here's how it's cluttered, and here's how it's cleaned. And this looks much better to me. Buying opportunity right here. Too bad we didn't catch the bottom when it was negative. And these are potential tops. And one more could be coming soon. Okay, now we're going to look at gold. I believe gold is the driver and silver is the follower. That's how it always is. Now, this definitely has some more room to the upside, and I do think that the all-time high is in the making. Now, we may hit the all-time high and pull back a little, maybe pull back to 1800, and then I think we can make a cup and handle, and then we can really break out. What's my target on gold? I think gold can go to 3K. Do I think gold will go to 5K? Probably not. But I think gold can go to 3,000. When? I don't know. Let's see. Here's the daily chart. And the daily chart is showing us that we just had a trend change to the upside a couple of days ago. And we're still bullish. What about the weekly? The weekly looks great. This is an extension top from here, from this arrow. And the daily chart, sorry, the weekly chart had a bullish trend change right here. I think there is a bug because there should have been a green star way earlier as well, because of this red star had to be neutralized. So not sure. We will, update the code for bugs. And now we're waiting for a top, which should be coming in a few candles. Now silver. Silver is another interesting situation. Here is the CFD on silver. And as you can see, silver had one of the extension tops yesterday. And C probably is the most important. They are in order, A, B, and C. A is least important, B is second most important, C is third most important, or most important. Okay, sorry. So C is most important, then B, then A. So it's kind of backwards. And today, we also have a double top on silver CFD. But that is not true for the silver future. So if you look at the silver future, that is not it. If you look at the silver future, oh yeah, TLT. Haven't looked at TLT in forever. So if you look at the silver future, they're not aligned, just like the S&P cash is not aligned with the S&P futures. So right here on the silver future, we have a break in the count. So this silver future may not hit its top for a while, and it's not going to be a double. So I don't know what the right count is. And this is one of the drawbacks of the MRI, is that it's so sensitive to the dollar. And this is where we might implement some flexibility on the sensitivity, but we haven't gotten there yet. So it's possible that the spirit of the indicator is hitting a double top. But when you do the math down to the penny, it doesn't actually call for a top right here, which is unfortunate because I'm not sure. No indicator is perfect. So we will do our best to make this as useful as possible. But there is a break in the count here. It's hard to tell yet with the MRI, but we will get to it. But if I turn on the old school one, you can see the break in the count. And if this didn't break, 1, 2, 3, 4, 5, 6, 7, 8, this would be an 8. And then tomorrow's candle would give you that double top. And we may program the indicator to kind of take this into account and align them. All right, my computer is really lagging. All right, Bitcoin. Let's finally get to Bitcoin. So what do I think about gold and silver? I think silver has gotten out of hand, and I think silver is going to pull back. I'm going to trust this red arrow and think silver is going to pull back. Gold might pull back a little bit as well, but I think silver just got out of control. Remember, silver is the shit coin to gold. Just like Litecoin is the shit coin to Bitcoin. It can rise in percentage terms higher than gold, but on a longer term scale, the gold silver ratio will continue to expand. Let me pull up that ratio. I have two of them. I have a historic one and I have a commented one. I kind of need them both. Wow, I actually have three of them. Jesus. Oh no, it's Dow Gold. Okay. So I'm going to pull this one up. Oh, I forgot which one's which. I'm going to pull this one up. So these are my two gold silver ratios. Because one goes back a little bit further than the other. And all my annotations are on the wrong one. And then we'll get to Bitcoin. Okay, so here's the gold silver ratio. And this one. It really spiked to 120. This is a weekly scale, so you probably won't see it. I want to see which one has a bigger history. Yeah, there it is, 120. So this is the one with a shorter history, but this is the one where I have my annotations. Clearly, this prior level of short gold by silver got destroyed. And if you took this trade, you got wrecked. It was supposed to be a spread trade, and you just got wrecked. I didn't take the trade, though when this thing pulls back, I want to convert all my silver to either gold or Bitcoin. It's easier to convert your silver to gold because I can just walk into a store, bring in all my cash silver, all my silver, and buy gold with it. And hopefully I can avoid doing KYC on that transaction. So, yeah, and this is the one that goes back way further. So here we are on the gold silver ratio that is dropping down back to only this area, which used to be all-time highs at 80. But now this 80 will probably serve as support. And then I anticipate the gold silver ratio to turn somewhere from here and go this way. And this is why I think gold can go to 3,000, but I don't believe that silver will break 50 bucks. So a gold silver ratio of 130. So let's go back to the gold silver ratio of 100, right? So a $20 silver is $2,000 gold. So $20 silver to $4,000 gold is a ratio of 200. So $20 silver to $3,000 gold price is a ratio of 150. So if silver is, say, 30 bucks, so if silver is 30 and gold is 3,000, we're back to 100. So silver about $25 and gold about 3,000. That gets us in that 125, 130 range. So that's what I see for the future of gold and silver. At what price would you go all in and sell your silver? I should have done it at the gold silver ratio of 120, but it didn't last very long. So there's two prices here. One is I think if silver gets to like 30, 35 bucks, it's time for me to get rid of my silver. But if gold is overly expensive, I'm not sure what I would do with that silver. Ideally, I want to dump my silver. I'm sorry. I'm getting that backwards. ideally I should be getting rid of my silver now with the gold silver ratio around 80. I wasn't thinking straight. I guess still too early for me. So now is probably the time for me to convert my silver into gold. So hopefully this ratio will drop down to maybe the 70 range. I hope maybe 75. So I should be really calling up my gold dealer and bringing in all my silver. I got an unreasonable amount of ounces of silver that I need to unload. Why are you so bearish on silver? Well, I'm bearish on silver because I realized really, really late, unfortunately, that silver will never, ever, 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 ever be money again. It can't. The reason why silver can never be money again is because the modern technology has now made gold scalable to micropayments. So the reason why silver was ever money was because silver was a micropayment of gold. The technology at the time did not allow gold to scale to small transactions. But the modern technology of the 20th century with modern banking allows gold to scale to microtransactions. Now, remember, no one uses gold as money. But if they did, if people started using gold as money again, you no longer need silver to be the micropayment to gold. This is why Litecoin is not needed as a micropayment to Bitcoin because of Lightning. As long as Lightning succeeds, as long as Lightning works, Bitcoin will scale to small transactions. And if Bitcoin scales to small transactions, you don't need a shitcoin for the small transactions. So silver becomes only an industrial commodity, like copper, like aluminum, like nickel, like I don't know. I don't think anyone uses bronze for anything these days other than medals in the Olympics. So maybe they use it for something. I have no idea. But silver becomes simply a commodity. It becomes an industrial metal. Now, I've been meaning to update my kitchen equipment, and I'm really thinking of buying copper pots. I heard really good things about them. I have no idea. I have to do more research, but I heard good things about, copper pots and pans. So if copper was being treated as money, those copper pots and pans would be unreasonably expensive. Those pipes in your house would be unreasonably expensive. Silver is the same way. Silver has very good industrial metal properties. I would love to eat literally with a silver spoon or a silver fork because it has really good germ killing microbial properties. But it's a little expensive to be eating with silver forks and spoons. The reason why it's a little expensive to be eating with silver forks and spoons is because silver still has monetary premium on the value of silver. When this monetary premium goes away over time, as this ratio of gold to silver continues to trend towards, say, 1,000, I don't know, what's the ratio of gold to copper? We can check it. Now, silver is obviously more valuable than copper. Maybe, I don't know, maybe it's not. Maybe it is, maybe it's not. There's more copper in the ground than silver, but copper may be more useful as an industrial metal. So if we do a check on, I guess I can do the futures market, but let's do gold. Drop the explanation point. I'll just use the CFD market. There's two of them. I don't know which one has more history. I'll just grab the first one. So let's do gold. And we're gonna oh, sorry, not gold, my bad. Oh yeah, gold to copper. I'm gonna do gold and I'm gonna divide that by copper. There is no copper CFD, unfortunately. So I got to divide it by the futures market. Why is this Mexico? Let's use the COMEX. Right. So let's do this. That's the best I got. So what is the ratio of gold to copper? Well, that ratio is 640. So clearly 1,000 on the gold to silver ratio is very unlikely. But let's look at the ratio of copper to silver, which could be very interesting. So SI1, I've never looked at this before, guys. I do a lot of my thinking. I think that's all I need, really. Yeah. Oh no, explanation point. That's what I forgot. I do a lot of my thinking live on air, and now we can do HG1 explanation point for the nearest future. What am I missing? There it is. I think I need to do the same thing with that silver. I think I need coal. I think I need this. Okay, let's try that. Let's see what that silver to copper ratio looks like. I'm going to set this to weekly. I'm going to set it to a line chart. And I'm going to zoom out. So it looks like that's all I got. Data going back to 2009-ish. And it's pretty cyclical. Oh, no, I have more data. So let's go monthly. Let's ignore that original spike. So as you can see, the silver to copper ratio is slightly trending up. So silver is still considerably more valuable than copper. Interesting. I thought this would be slightly trending down as silver becomes, I would have guessed that this would be slightly trending down as silver becomes more of an industrial metal like copper. But since 2008 crash, we've kind of been trending up. But since the peak in 2011, we've obviously been trending down. So you can see right here that copper has been more valuable than silver since silver's peak in 2011. But this peak had to do with speculation and money. Now, as less and less people believe that silver will ever be money again, because it won't. It can't be money anymore. Silver can't be money no more than Litecoin can ever be money as long as Bitcoin scales to micropayments. But we know gold scales to micropayments because no one will ever use physical gold in a store. They will just use gold-backed currency, which scales to any level. I think I've explained this enough. And that's what's really, really important. Okay, let's go back to candles and we'll change this as we go. Okay. Now let's talk about Bitcoin. Good question, though. I have other good questions. Let me just glance. I'm going to open the Bitcoin chart, but then I want to read a couple of questions here. Hey, Tone, something I don't understand. When you do an update on your videos on demand, if I purchased it 1 year ago, do I have access to the updated version like you seem to say about the indicator? Unfortunately, no. And you're not going to like my reason for me saying no. The reason why you have access to new versions of the indicator is because when I update the code, you automatically get the update of the new code. This is an automated system. I don't have an automated method to give you the updated video of the latest one. And in order for me to find every single person that has taken the workshop before and provide them with a video, I would basically quit because I don't have the capacity, nor do I have the programming ability, nor do I want to pay tens of thousands of dollars to a programmer to automate this process. So that is the main reason why this unfortunately does not happen, because I don't have a simple solution to solve that problem. And no, I'm not entertaining volunteers to solve the problem, because that's, again, an unreasonable amount of work on my part. Like I said, you're not going to like the answer. You can think that I'm a dick for saying that, but that is the honest truth reality. And emailing me one person at a time for me to provide it to you is not a good solution. I will just delete the email and probably block people. Because again, I don't have the capacity to deal with everyone individually. Tone, how do you get a project funded without a shitcoin? Good question. How did we arrive with the technology? It's like people think that somehow no one got anything done and no one has ever started a business prior to the invention of ICOs on top of Ethereum. This is a very terrible thinking on people's parts, that somehow you can't get a project off the ground without printing your own money and scamming unqualified investors. At what point does the national debt and Fed balance sheet start to concern you? When they start printing $1 trillion a day? Maybe. The national debt doesn't concern me, and it never has. If we go to national debt clock, this number doesn't concern me. This number is $26 trillion. I find it to be pretty irrelevant. I've talked about this before. The reason why I find this somewhat irrelevant is because most of this is owned to either the central bank, which doesn't have to pay it back, or you don't have to pay it back to them, or to foreign countries, which we also don't have to pay back because no one is coming here with their guns to collect. The number that bothers me is this number, U.S. unfunded liabilities. This is the scary number. This is not 26 trillion. This number is 153 trillion. That is concerning, because that is the money you owe to your own citizens. This is the police. This is the fire department. This is every single person that works for the government. These are the teachers. And when this number starts to actually affect people, you will get Portland all over the country. So there you go. Portland, Seattle. This is it. This is how the country basically destroys itself from within. So ignore this number, but pay attention to this number. When all the government employees, many of whom are armed, including the US military, police, FBI, CIA, NSA, you can keep naming agencies with guns, IRS, agencies with guns. When all of these people, plus all the teachers, like the teachers don't want to be armed, but you take away their salaries, they're going to arm themselves real quick. So this is the number that's going to destroy the nation eventually. This is the number you want to avoid. This is the number you want to keep down. And this is a problem. This is what you owe to your own citizens that will get their pound of flesh one way or another from the country itself. Why do you think the euro is structurally flawed? Wow, am I going to get to Bitcoin at any point today? Again, very long conversation. It's not, I can't answer why the euro is flawed in 3 sentences, guys. But let's look at Bitcoin. I want to look at the price of Bitcoin. I also want to see what the S&P is doing. Oh, 10 a.m. 10 a.m. Shit, I can't get to Bitcoin. 10 a.m. reversal. Let's take a look if it's actually happening. It's 10:04. I already missed it. I have to go to a 10-minute candle. You know, living in the U.S. isn't that bad. I actually like being in the U.S. It's still somewhat safe. It's not as dangerous as people think. You know, you have access to good healthcare. I mean, if you have decent financial resources and you have the opportunity, the U.S. is one of the best places for that opportunity to have good financial resources. You also have the internet to get smarter, though most people don't use it that way. And U.S. ain't that bad. Like, I'm not talking shit about the U.S. I still think the U.S. is still one of the better places to live around the world. But that number of 153 trillion of unfunded liabilities is a problem. And that problem is created by the Democratic Party mostly, though Republicans are also to blame, for promising unreasonable pensions and salaries and God knows what else. What are your thoughts on Steve Keen's debt jubilee and reset of the economy? Again, guys, not simple questions. Not simple questions. Move to Texas. If the U.S. falls apart, it's the best state. Yeah, Texas is one of the better states. I agree. Texas is one of the better states. So 10 a.m. was right here. But I don't really consider that a big enough reversal. Let's see what leads to it. I wouldn't take the trade. It's not like we were falling into 10 a.m., in which case it would have been a buy. But right around 10 a.m., I had a bullish trend change. The low came in at 9:30, and we've been trending up a little bit. That's not big enough a move. That's maybe 5 points. Oh, it's 10 points. It was big back in the day when I was trading the strategy, not so big these days. Not much. All right, Bitcoin. Look at Hyperwave. Still stuck under phase 7, nothing new. Let's look at the weekly chart. The weekly chart is peaking above the trend line. It's very hard for me to fudge with this trend line and adjust it further up, because then I'm getting further away from this rejection. So let's see how the week closes. I still believe we have a high chance of going lower, but the S&P keeps pumping, and so is Bitcoin. Let's see if we can sustain this. We did talk about the ascending triangle on the weekly, in which case I would need this to go to 97 and then pull back down to 93, 94, and then come back to 97. And then I would probably be bullish for the rest of the year. And then I could potentially lose my bet on Bitcoin closing above 10,000 for more than 90 days. Short-term time frame. It's hard to deny the breakout out of this symmetric triangle at this point. Can always be a head fake, but at this point, this looks like a breakout. We've been looking at the Arun, and as you can see, the Arun made it to 100%. So this is how this particular indicator is traded. You take the trade when the lines cross each other. If green crosses the red, you take the bullish trade. If red crosses the green, you take the bearish trade. The lower in the percentage scale the cross took place, the better the trade usually is. Again, no indicator is ever perfect. I talked about this at length. This is something I taught in the last TA workshop. And I think the next TA workshop is going to be even bigger and longer as I'm adding more and more indicators. I honestly want to teach everything I know about technical analysis in one day, but now it feels like I may need 2 days. So for those of you that asked, back in the day when you took my workshop on intro to trading, whether it was in person, probably in person, everything that I did in the first 3 hours, the pre-lunch period, that 3 hours is now being extended into a 6-hour workshop. Just that 3 hours became 6 to 7 hours, and I might go as long as 7. Oh, sorry, I might go as long as 10 hours, which may need to be 2 days. And it's only TA, and it's nothing about the MRI. It's nothing about sequential. There's no live trading. There's no mock trading. It's just education on TA. And the workshop I will be doing this Saturday, this is where we're going to do mock trading. This is where we're going to look at the markets, maybe not live markets, but historical markets in replay mode, and attempt to enter and exit trades to teach both position management and money management. Where was I going? Bitcoin. So this indicator worked out really well. I pointed out the moment I saw this crossover down at the 11% range, and we hit 100%. Now, hitting 100% does not mean exit the trade. You exit the trade, well, it's up to you to be consistent. But I would not be interested in exiting this bullish trade if I had taken it right off of this line. I'm not going to bother saying whether I did or didn't buy GBTC. But as long as this stays above the 50% line, and as long as it's not crossing the red line, I'm not concerned about the holding of the long position. That's how this particular indicator is used. We can look at the BitMEX funding rate, and we can see that it's not even favoring the bears yet. Barely. People are not rushing in for leverage buys. So this is actually good for the bulls. Very good for the bulls. The RSI has broken out above its potential descending triangle, but it's still nowhere near overbought. That's the daily scale. The MACD is crossing over into bullish territory, and it is crossed over within itself. So the MACD is almost fully bullish. Maybe another day or two, and it's going to be fully bullish. And the ADX. Oh yeah, so ADX is a tough one. So we talked about ADX. I'm not going to get into it much here. The ADX is still not on a bullish trade. The ADX is telling you not to enter the trade. I don't have CMF on here. There's too many indicators, guys. Can't look at them all. We broke so many levels of resistance, and it looks like Bitcoin still has a little bit of life in it left. Let's see if we can make it from an MRI buy into an MRI sell in about 5 days. 4-hour chart. 4-hour chart has broken out. I have put the target in. This target is all the way out at 10,400, which would be a very strange situation, completely annihilating my views that Bitcoin is going to pull back to 8,000, because now it's just too many triple and quadruple tops at that $10,000 range, in which case I become a Bitcoin bull the way I am a gold bull. What are your thoughts on the crypto custody service? We're going to talk about probably tomorrow in our news show. Okay. Any other good questions? Tone, if Bitcoin consolidates 9.5 to 9.7 thousand throughout the weekend, and next week, would you be bullish even though we're still under 10.5? I'll be bullish for a breakout above 10K. If Bitcoin consolidates between 9.5 and 9.7 through the weekend, going into Monday, yes, I would be bullish on a breakout. Let's go back to the S&P. Let's take a look. Did that 10 a.m. reversal work out? Oh yeah, it sure did. So the 10 a.m. reversal worked, even though I was skeptical of the 10 a.m. reversal. I just can't get my own system right on trades. Look at that. So I always talk about the 10 a.m. reversal, and I had the 10 a.m. reversal. The top was made. The top of this. So this is when trading opens. Trading opens. Here's the opening candle. Trading opens at 32.73. In the first few minutes, we fall down about 3 points. Then we go up into 10 a.m. Where did the market top? On what minute did the market top? The market topped, at exactly 9:50. So it was the 10 a.m. candle, but the top did come early on in the 10 a.m. candle. And down we go from that candle that ended at 10 a.m. The 10-minute candle that ended at 10 a.m. The 1-minute candle that started at 9:50. So again, this is what makes this system kind of tricky. This was the candle. This is the candle that ended at 10 a.m. This is a 10 a.m. reversal, and it dropped the market. Let's not get picky. Let's pick exactly 10 a.m., which is that, and the market had fallen 10 points, or 1/3% in 15 minutes since exactly 10 a.m. There's your 10 a.m. reversal. You get mad every time Microsoft makes an update to Windows. Yeah, I do. I don't know if that was to me or not. I do. I hate updates. I do my presentations in Prezi, and I hate Prezi now. What do you call it? Zoom was so much better before all their stupid updates. I hate updates as much as the next guy, which is also why I don't update these indicators very often. Which is also why Bitcoin doesn't update all that often. A lot of updates are not good. It's just not good. Not to mention, a lot of updates cause a lot of issues. There will be one last update to TI, and after that, there won't be any more updates. All the updates will take place on MRI, and but you will have access to both if you had access to one. Once I stop selling access to TI, you will never be able to get access to it. It'll be locked down. Oh, CME. Thank you. Thank you for the reminder. So the reason I wanted to look at CME is a publicly traded company. Because we were talking about the numbers on top of the arrows. This is a monthly chart. I'll probably have to go weekly. Or daily, I don't remember. Maybe it's daily. Oh no, I think it's weekly, but I think it's years ago. Man, I had a really good example. Let me see. Or maybe it was monthly. Should probably do this off air. And my computer is too slow. Let's go back to the monthly chart. I think it was this stretch. Yeah, I think it was this stretch from 2003 up to 2007 on a weekly scale. So let's go back to weekly. And I'm just going to use the go to button. And I'm going to go to 2005. No, wasn't it? And it's not monthly. And I don't think it was daily. So anyway, there was a situation where there was like 5 or 6 tops in a row. So you would have had that arrow with like a 6 on it. Maybe it was daily. Let me go daily to like the 2005 area. Last available bar. What? Beautiful bottom right there. Man, I gotta find that. I took a screenshot of it back in the day. Maybe it's in my computer. Hold on, let me see. Pictures. I'll do a search for CME. Nope, not there. Too bad. Nope. I'm pretty sure it was this stock, but I forgot the time frame, and I forgot when this happened. Nope. All right. Well, too bad. Can't pull it up. All right, back to the S&P. What do we got? Oh yeah, here we go. Still going lower. There's your 10 a.m. reversal. There's your lows. Here's your daily chart on the S&P. So the daily futures are, certainly so far respecting the sell signal. Remember, the last time we had it looked like this. So just be careful. Okay. Hey guys, once again, in 2 days, I will be teaching risk, leverage, money, and position management. This is where we put everything we learned 2 weeks ago into action and learn money management and position management at the same time. This one webinar will replace this webinar, risk, position size, leverage management, and this webinar, entries, exits, and stop losses. Both of these will be replaced by the one I'm doing this Saturday. The video that I did from 2 weeks ago, the 6-hour-long video, has already replaced this intro trading. And if you end up buying both of them together, the new one that will be here by Monday And this one, you'll have a discount. So it'll be 0.05 each or 0.075 for both. So I got to set that up on the on-demand page. Trying to make these as, useful and professional as possible. And then this will eventually be replaced by MRI, though it won't be in this section. It will be in the indicator section. And once the MRI comes out, there won't be lifetime access, probably not. It'll be subscription, probably. Haven't decided everything yet, but it will be here and they'll be, better described and stuff. So I'm still working on all this. All right, that's it. If you want to support, check out the affiliate page. And if you want a free resource on trading, check out Learn Trading. Continue to update this a little bit every day. A little bit every day. All right, guys. Thank you so much for watching. I couldn't get to the Euro question. Maybe next time. And I will see you all on the next one.